Bitcoin spent the week inside a macro-driven compression window as fees collapsed. Block production slowed, ETF flows turned mixed, and geopolitical tension tightened liquidity across all risk assets. Today is July 20th, and the signals from the last 7 days show a market that has stalled structurally, even while price holds its range. This week was defined by soft block demand, minor stress, macro volatility, and cautious institutional positioning. CPI and PPI relief gave Bitcoin a brief window, but hawkish testimony from Fed Chair Warsh closed it immediately. ETF flows stayed mixed, stablecoin liquidity weakened, and geopolitical events added pressure. Bitcoin's forward momentum was shaped by macro structure, not crypto speculation. Bitcoin structure this week was defined by compression. Price pushed from 62,000 towards 65,000 after softer inflation prints, but the momentum stalled as soon as the Fed reinforced restrictive policy. The chart remained orderly, but upside was capped by macro liquidity. On-chain, fees collapsed to the protocol floor. Median fees held at 1 sat per VByte for almost the entire week, signaling extremely soft demand for block space. This was one of the cheapest fee environments of the year. Block production slowed sharply. Only 513 blocks were mined versus the expected 1,008. That's a 45% slowdown and a direct contributor to the fee collapse. There was no structural breakdown, but there was clear minor stress and reduced throughput. Volatility stayed muted, and the market remained range-bound. Flows showed hesitation. Confirmed ETF data recorded negative $188.1 million over the last tracked 7 days through July 9th, with July 9th alone at negative $95.3 million. Later claims of positive flows are not yet confirmed by tracked sources. This is not aggressive accumulation behavior. Stablecoin liquidity weakened. Market cap dropped $10 billion since May as traders rotated into higher volatility assets. That has reduced settlement liquidity across the entire crypto market, and it directly affects Bitcoin's ability to expand. Geopolitical tension added pressure. The fourth round of U.S. strikes on Iran triggered a sell-off across oil, gold, equities, and crypto. Bitcoin dropped 3% with $250 million in liquidations. This was a risk-off response across global markets. Positioning leaned cautious. Institutions remained defensive. ETF flows were mixed. Macro desks reacted positively to CPI and PPI relief, but pulled back after Warsh's testimony. Corporate treasuries stayed stable, with polymarket bettors pricing only a 3% chance of a MicroStrategy margin call in 2026. Banks and asset managers did not meaningfully increase exposure. This was a week defined by observation, not allocation. Institutions waited for clear macro signals before adjusting positioning. Sentiment stayed neutral. Developer activity remained steady, but the fee collapse and still block production created a perception of soft demand for block space. There were no major upgrades, no major failures, and no major catalysts. The network remained stable but inactive. This was a sentiment profile defined by caution and not confidence. Now, the forward outlook for Bitcoin is defined by three forces: macro liquidity opening, block demand returning, and ETF flow is flipping positive for multiple days. Until these align, Bitcoin remains inside a neutral compression window. If macro conditions stabilize, late July into August becomes the first realistic window for early expansion. September remains the strongest structural month for a meaningful move as post-summer liquidity returns, institutional positioning resets, and volatility drops. The 4-year cycle is still on track. Bitcoin is in the standard post-halving consolidation window, and the expansion phase begins once macro liquidity improves. The cycle is healthy, and the next leg is building underneath the surface. So, if you want a clean framework for reading weeks like this without getting lost in the noise, it's exactly why I wrote Understanding Crypto, a clear guide for new investors. It shows you how structure, flows, and sentiment fit together so you can read the market the same way institutions do. Of course, I'll put a link up for you. And follow me for full breakdowns and tell me what stood out to you this week. Your take helps shape what I cover next. Stay locked.